Oh, well, welcome. It's Alec here coming to you from the UK in London. And we're going to try some different technical things. There we go. I hope you can see me on the webcam. I've got a friend with me here, Bob Skidstead. Hey, Bob. He's just here to keep me honest, to make sure that I'm not giving you the wrong kind of information, because, of course, this is a webinar which is designed to help you to improve your and grow your wealth. And it's also quite nice to have this webcam to show you that we really are here. We're not cardboard cutouts. The idea is that for those of you who are regulars, you know this, but I'll just go through the basics as well. We have a portfolio that we run every you see, there we go. Now I have to try and work on the technicals. There we go. Haven't used the webcam before, so it was something new. But there's the rationale of the portfolio. We focus on South Africa's global champions with a bent towards those companies that are run by entrepreneurs. It is a interactive webinar. If you can just make sure, first of all, that everybody can hear us, and for that, I'm handing you over to our managing editor in Joburg, Stuart Lowman. Stuart?
Thanks a lot, Alec. Welcome all. Thanks again for joining us. If you can just show us a high five, if you can hear us clearly. There's a little sort of high five button that you click. It's just our way of communicating from your side to let us know that you can hear us. And once you've done that, as you know, we always interact with questions, and I'll jump in when Alec sort of goes through the discussion. But if you can just put your question in the Q&A board on the right-hand side, little toolbar questions. If you drop your question to there, I'll get them through to Alec, and hopefully we can answer them as clearly as possible. But thanks, Alec.
Okay, did you get a high five, there, Stu?
Yeah, it all looks good.
Great. So everyone can hear us, so we can go straight into it. So the idea really here is to let's just start with our view, and it'll come through a little bit more clearly as we go into the webinar. We believe that South Africa is being poorly managed economically. We believe that it's very unlikely with the current government that there is going to be much change in that focus. And as a consequence, we think that the share price of South Africa, i.e. the South African rand, is going to be weaker over time. So although there will be all kinds of volatility in the short term, in the long term, you need to insure yourself against this continued decline in the value of the currency caused by poor economic management. Now, this is a view that we've had now for a few years. It has worked out pretty well in our global portfolio, which is invested in offshore shares, non-South African shares. But the local portfolio, the SA Champions portfolio, is only those stocks based on the JSE, and also the stocks that have a South African connection. So we aren't saying, let's go and buy a BAT, for instance, or let's buy the RMB instrument, which gives you an investment straight into treasury bills in America. We're saying buy into South African shares run by South African entrepreneurs, which are listed, or rather doing their work outside of the country. They need to be listed on the JSE. So you need to be able to take your rands and to put your rands into these shares at any time that you want to. So it's an alternative, if you like, to buying the Satrix 40 or other kinds of ETFs. But the directive here is South African companies that are trading internationally or operating internationally, and those that we think have got great potential. Now you'll see as we get into the portfolio that we've done pretty well on, of the 8 stocks, 3 have done unbelievably well. 1 has done unbelievably badly so far, and then the others have been kind of bumping around there, those that we selected, and we have gone for only 8 of those shares. That is the primary driver, and I'm going to spend a little bit of time on this because we've had quite a lot of political issues happening in the past month, in fact in the past couple of days. But as you can see, this portfolio will perform when the rand weakens. Now in the past month, and I'm going to use another little tool here, so if we have a bit of technical problems, just forgive me, but in the past month, it was on the 13th of July that we had our last webinar, and that was around here. And at that point in time, the rand was at 13 Rand 22 to the US dollar. We then had an improvement, a significant improvement in the value of the rand, as the US dollar came under pressure. We know that the US dollar is looking a little bit wonky at the moment. It's gone from 124 to 130 against the pound, for instance. So we then saw the rand appreciating as everything else appreciated against the US dollar, and it got down around about July the 17th to below 12 Rand 90 against the US dollar. Once again, that was probably the best point in the month, in the past month, on the 25th of July, when it almost hit 12.85. But then we had the announcement of, well, the finalization of the date of the no confidence vote, and you can see what happened there. The rand weakened all the way to 13.45, and the day before the vote, the speaker, Brait, said that it would be a secret ballot, and suddenly over here, people in South Africa got, or rather international traders, got terribly excited. They were buying the rand as though the vote, the secret ballot vote, was going to make a big difference. It came down just before the ballot itself to around 13.10, and then you can see after the ballot, it's been shooting up in the other direction. In fact, getting back to 13 or around 13.50 immediately after the vote. So what does all of this mean? Well, there's all kinds of speculations on what the secret ballot meant, and where the some media commentators are suggesting to us that Baleka Mbete is now the new hero, that she was prepared to go with a secret ballot. I have a completely different view on this, and for what it's worth, let me give you my insights. 198 ANC MPs voted with Zuma, and this was after they were given information which showed the depth of the corruption that is occurring in South Africa at the moment. There can be no doubt in anybody's mind that they voted for a perpetuation of a system that is being allowing the Gupta family to continue to essentially appoint cabinet ministers. Those cabinet ministers have their positions on the basis of the favors that they give to the Gupta family. The Gupta leaks, we've seen those emails come through, which is really unpacking everything on that side. We also see that there is a country that at the moment is ruled by a political party which doesn't worry about these things. Now, I'm not saying this to be emotional or saying it so that you can get yourself caught up in the emotion, because it's very easy to do that. It's very easy to get angry about it. But I'm rather saying to you that this is the reality of the country that one lives in, and it's the reality of the investment climate that you have to deal with. The no confidence vote showed us that the ANC of 251 members who were there, 251 seats in Parliament, of which 10 members weren't there. So, 13 members weren't there. There were 238 who were there. The others were sick or not in Parliament, or there were by-elections. But anyway, 238 were the number of votes that the ANC could count on. 40 of those decided to vote either with the opposition or to spoil their ballots, to abstain. That tells you that the ANC, essentially, of those who are now in Parliament for the ANC, 5 out of 6 are Zuma deployments. 1 out of 6 is with the Pravin Gordhan, if you like, the reformist camp. There's a brilliant, brilliant book that has been written by Yaki Selir, which I'm going to be interviewing him next week. And in fact, it's so good. I'm going to put on this there we go. You can see it. Of course, it comes backwards to you. It's called Fate of the Nation. It's well worth reading. As you can see, I'm about halfway through it, which is not bad if you are going to be doing an interview with the author in a few days' time. So I'll finish it over the weekend. But in this Fate of the Nation, he unpacks things beautifully. And where he tells us that the ANC has got what is called traditionalists, and they have got reformers. And what we now know after the vote on Tuesday is that the traditionalists, in other words, the Zuma camp, are 5 out of 6 of ANC members in Parliament, whereas the reformers, if you like, Pravin Gordhan camp, are only 1 out of 6. What this means is that we're going to head into an election for the next president And clearly the traditionalists are the ones who are going to be deciding who that next president is. And after that no confidence vote, which remember was a secret ballot, I'm of the opinion that now, as things stand right now, unless we have some seismic event between now and December, and in South Africa, who knows, this can always happen. But as things stand right now, Dlamini Zuma will be the next president of the ANC, which will make her the next president of the country until the election in 2019, and then the nation is going to have to decide what kind of a future it wants. So bear that in mind as a background to where we are going, where the country is sitting, and then you have to ask yourself, how is the South African rand going to react to this? That increase in the value of the rand over here, when you see it there, that was all to do with the possibility that Zuma would be voted out. The possibility, because of a secret ballot. The secret ballot failed, and now we have more of a reality that is set in, that this is a country that is going to be going along a particular path, economically a path that is unlikely to be one that is going to be growing the economy. We do know that South Africa's economy has been flatlining now for something like 5 years. We also know, if you have a look at the data from around the world, and there's a very good breakdown in The Economist every week of 42 countries, and if you look at the 42 countries, with the exception of Venezuela, which is imploding, the other country that performs worst in the world in its economy is South Africa, which has an economy that is contracting right now. So you have in power traditionalists. They are applying certain economic policies, and they have a consequence, which is a consequence for the economy and a consequence for the South African rand. That is the reason why we feel very, very confident about the way that this portfolio has been structured. The rand depreciation, as you can see down the bottom there, has in the past month was 1.3%. In the month before, the depreciation was actually down to 3.4%. So in the last 2 months, the rand has depreciated by 4.5%. As a consequence of that, we've seen a improvement in the portfolio, remembering that this is a long-term portfolio. So it is something that is going to take us, the idea really is that you buy the shares and hold them indefinitely. Now, that hasn't been the case. We haven't been able to do that initially, because we have been sorting the portfolio out, if you like, from the 23rd of January. We started with an investment of 100,000 Rand. You can replicate this in your own account with easy equities. Why have we done easy equities? Because they're cheap. And why do we think that cheap is important? Because Warren Buffett tells us that you have to look in the long-term performance at your costs. If you can get your costs down, it makes a massive impact when you're making a long-term bet. We are taking a long-term bet on this portfolio in the view that we want to keep the costs as low as possible. We want to go with that strategy of investing in good South African or investable companies in South Africa in rands that are going to be around the world. And here was the investment, the changes we've made. On the 4th of May, we sold those Blue Label shares and bought additional Naspers shares. There's no mystery in that. Naspers at the moment is 25% of the Swix index. In other words, if you take South African pension fund portfolios, of their equities that they own, 25% is in Naspers shares. And that's the reality of it. Thankfully, Naspers is a fantastic performer, and we'll talk about that in a moment as well. And then on the 1st of June, we sold Wilson Bailey shares. They were in the portfolio because I was quite excited about their potential in Australia. I'm not so excited about their potential in South Africa, which is half of the business. It's a very well-run company. But with the kind of economy that we're looking is likely to eventuate in South Africa, a company like Wilson Bailey is not well positioned. You can't, if you're a construction company, there's not a lot of construction going on. Clearly, you're not going to outperform. And then we switched into Glencore, and the reason for that, those of you who were in the discussion on the June portfolio, you'll recall that it is a bet on electric cars. So how does that all work out? Well, Glencore is the world's biggest producer of the minerals that are going to be used in electric cars. So we've gone from from Wilson Bailey, which is construction focused South Africa, to Glencore, a bet on electric cars in the long term. Here's how the portfolio has performed. And you can see in the last month, there were some quite interesting changes. Naspers was the best of them. the share price of Naspers going from 26.50 to 28.77, and that's 2,877 rand 75 cents to be precise. That was based on Tencent. What happened in the past month is that Tencent came under pressure for various issues in China. Remember, Naspers is trading. It's Tencent shares alone are worth 130% of the Naspers share price. So you really are getting in at a bargain there, but you've got to believe in Tencent, and I believe hugely in Tencent. In fact, we have Tencent as a separate holding in our global portfolio. The improvement there, you can see it quite clearly that our three biggies are Naspers, or the three big performers were Naspers, Discovery, and Glencore. Glencore, the most recent addition, has done amazingly in 2 months, is up more than 20%. On the downside, though, Brait down nearly a quarter of its value since we bought in January. The rest are kind of here or there, and the JSE All-Share Index is beating us at the moment. It's up 11%, whereas this portfolio is up 5%. I'm not worried about that. In the long term, I'm quite comfortable that as the rand deteriorates, this portfolio will outperform. And I'm also very happy with the structure of the portfolio, and we'll know why as we go through the different constituents of it. Stuart, just to remind us, are we open for questions?
Yes, we're open for questions, Alec, but it's looks like a secret ballot. Nothing coming through this side. Just a reminder to everyone to please plug their questions in on the right-hand toolbar, and I'll pass the most through as soon as we can, Alec. So yeah,
all right. So it's pretty easy to do that, to request those questions. So go for it as you can. As you can see, the portfolio overall 105,651. Remember, that's also after costs. So we've taken the VAT and the trading costs and everything else into account. And if you're buying this bundle through Easy Equities, literally you don't have to worry about anything else. You put your whatever it is, you can put from 250 Rand, and then it'll be put into this proportion into these stocks. And you then, every month that you come back here, you'll see exactly how your portfolio has performed. Right, let's get on to the next, getting into the portfolio itself. Starting off with Naspers. There's Bob van Dijk. He hit the news in the past month because of the share options that he was granted. He's a quality man, a very, very high-class executive. He is Dutch, he lives in the Netherlands, and he's done some incredible deals. In fact, I think as a shareholder of Naspers, and all of us who are in this portfolio are shareholders of Naspers, we should be sending Bob bunches of flowers for a transaction that he did last month. We discussed it with Delivery Hero. Delivery Hero, he bought into just before its listing, and that deal alone gave Naspers a few billion Rand, well, a few. They bought in at a price of 16 euros ahead of the listing of Delivery Hero, which is Delivery Hero is an e-commerce business headquartered in Europe, but it's a global business. And that share price then promptly, once it was listed, jumped to 28 euros. So Bob put, well, the value of the investment has gone up it's a 24 billion Rand valuation there. He's also done some good work in India, where Naspers is a big shareholder in Flipkart, where it's now 16% shareholder. Other shareholders there are Tencent, eBay, Microsoft. So you can see, people say that Naspers was a one-trick pony with Tencent. Nothing could be further from the truth. You have to dig into this business and see what they have been doing. South Africans, of course, see Naspers only for multi-choice and for the newspaper division, but those are really small beer when you compare it with the investments clearly in Tencent as a starting point, and with the investments elsewhere. In the past year, Naspers' share price has done well, as you can see, from 2,000 Rand a share. This is the JSE share price. Up until yesterday, it was at 2,950. It's come back a little bit this morning, 2,877. But since we bought into Naspers, which was in January, it was at around about this level here. You can see that. Apologies. I'll just show you, I'll get my pointer working properly. There we go. When we bought in January, around about this level here, you can see that Naspers has performed extremely well, and hence that 27% gain that is being shown in the portfolio. We also made the change from Blue Label shares to increase the Naspers holding. And given that Naspers is such a big constituent now of the JSE, that it makes 20% of the Aussie 40 index, 25% of the SWIX, which is the South African register, to have what we have in the stock, which is about 18%, is actually underweight. And if anything, I would rather be overweight in this share. But anyway, they say you've got to be diversified and you've got to be careful about these things, not to overdo it. And I guess that's part of the challenge that we have here, as you can see, is that is to actually get the technology working properly. But anyway, that's Naspers, and a wonderful performer it has been for us. Moving on to MediClinic, this is an amazing company. South Africans don't quite get yet what an incredible business MediClinic is. It has a vast private hospitals business in Switzerland. Its big question mark at the moment is the private hospitals business that it bought in the UAE. It's in the market to buy a big UK business as well, and all of those deals are aligned with getting it out of the exposure to the South African market. MediClinic not long ago was a fully focused South African business. Its investments in Switzerland and the UAE, and another big one coming in the UK soon. It already owns 20-odd% of Spire, but it is looking to do a bigger transaction there, one believes. We'll make it even more offshore focused. Remember, MediClinic is a member of the FTSE 100. This is something, again, that South Africans don't kind of get their heads around. And that's how big or how much the company has grown. It's a bet to a large degree on the rand, and from time to time, as the rand strengthens, MediClinic's share price falls. This has not been the best performer in the portfolio, as you are well aware, but it's only down by 4% now on what we bought it at. And if you consider that its major listing, or its primary listing, is in London, where we've had the impact of Brexit on the pound, then a 4% decline is not that serious. Stu?
Hi, Alex. So a question from Derek Jordan on Discovery. He said, ordinarily I'd be worried to buy a share like Discovery after a rise of around 25% in 6 months or so. Is it too late to start buying it now?
Derek, I think the best way to invest in this portfolio is monthly. You get rand cost averaging. You'll be buying Discovery at a higher price today than we bought it in January, but by the same token, you'll be buying other constituents of the portfolio at a lower price. I think Discovery it's a big call, this, but if you were to take of an operating business in South Africa, I would say it's the best operating business South Africa has. It's an amazing team. I see what they're doing here in the UK, and they really are making deep inroads in the UK market. Once they get that right, the rating of this company is going to change quite significantly. Not that it isn't already very well rated, but we're going to talk about Discovery in just a moment, and I'd rather hold that conversation for later. Principally, though, the best way to invest in this portfolio is to do it on a monthly basis. So almost to give yourself, if you've got, let's say, 5,000 Rand extra per month, just stick it into the bundle, that 5,000 Rand. And that way, and that's the fantastic thing about technology nowadays. Easy Equities will organize everything for you. They charge very little, in fact, a fraction of what other stockbrokers are charging. And that's a way of getting in. I think Discovery, by the way, is very cheap at the moment. But just to finish off then with MediClinic, I also think this one's very cheap. So very happy to have a big slug in MediClinic, and nice to see it seems to have found a nice bottom there for the moment anyway. Here's the one I need to spend time on. There's Christa Wiese, and he's a great entrepreneur. He hasn't got a flawless record. Who has? And at the moment, the market is saying he's lost it. Now, Christa's in his 70s. He's not He's not 100 years old. He's not a Robert Mugabe in his 90s. I don't think he's lost it. I don't think that he's been absolutely brilliant in his timing of one of the purchases in the UK. But on the other hand, he's very, very good at making turnarounds and making decisions when things are wrong. Now, Brait came out on the same day that the rest of South Africa were interested in the no confidence debate with its update of its net asset value. In March, at the end of, or about this time last year, 3 months before, on the 16th, March 2016, its net asset value was 136 Rand a share. The latest net asset value figure is at 74 Rand a share. And that's you don't need me to tell you that that's almost a 50% decline. And what the devil went on there? Well, in 2015, Brait did its deal with Steinhoff and got a whole lot of cash. So essentially what happened was that Christo Wiese had a big chunk of Pepkor shares that he put into Brait, which was then sold by Brait into the Steinhoff deal when Pepkor and Steinhoff merged. It's easy enough to imagine. The return on investment for Brait on the shares Wiese put in there for his shareholding was something like 70% per annum in the 3 years or so that they held. So he did Brait shareholders a very, very good turn in that regard. Where Brait shareholders are pretty cross with Christo at the moment is that he used that money to go and acquire 2 companies in the UK. One was to get 81% of a company called New Look, and that's been the disaster. And the other one was to acquire 71% of Virgin Active, which has done pretty well. On the 8th of August, on Tuesday, the latest net asset value figures came out for Brait. And remember, Brait is an investment company. So it owns New Look, Virgin Active, and another company in the UK called Iceland, which is a retailer, got almost 1,000 outlets. They're big businesses, all 3 of those in the UK. And then in South Africa, it owns the old Premier Milling, if you remember, a food business that does got a lot of mills, and it does produces a lot of South Africa's bread. It is unlisted, Premier Milling, as are the others. So that's what they do. They find a good listed company, buy it out, delist it, and in that way nurture it. The idea is to A, globalize, get away from the South African base, and that's what they've done very successfully. But B is to find very good value firms. Well, New Look has been exactly the opposite of what was anticipated. When Brait went into New Look, when it bought the company in June 2015, it paid over £700 million for it, and that £700 million has now been slashed down, written down to a fraction of that value. £783 million indeed. It's now supposedly worth only £400 million. So they've lost half their value in pounds on a company that's got at the time had 872 stores. The problem with New Look is that it's continuing to stagger. It has got a new CEO called Anders Christensen. Anders Christensen's claim to fame, if you like, is that he worked half of his career in the Far East. What Brait is doing now is it's building aggressively in China. And in its update to bondholders, it's not listed anymore, so it doesn't give updates to shareholders, but to bondholders, those people who've lent it about £1 billion. Brait explained that in China, it opened 17 new stores in the past quarter. That was the 3 months to the end of June. And it now has 127 stores in China, and 86% of them are profitable. So while you've got a UK market that is looking at the UK at the nearly 1,000 stores that New Look has got, and is saying, cheap as this company is a dog, what is not being appreciated is what's going on in China, where they are growing profitably and very aggressively. There's an interesting dichotomy going on here. I'm a bull on Brait, especially at this level, because although New Look hasn't bottomed out yet. Their EBITDA profit was about 27 million pounds, as against 43 million pounds the same quarter a year before. So The operating profit is not looking that great, 5 million now, 27 million then, but they are reinvesting. If you want to just unpack the numbers, and I'm not going to go into too much detail on it, but if you were to unpack the numbers, you will see that they are reinvesting. The difference between a profit of a year ago and the profit today is the money that's being reinvested into strategic initiatives, as they call it. Are they going to be able to turn this thing around? There's some who say no. I like the free cash flow number, and that came up, that doubled in the first quarter of the new financial year, which was the 3 months to June. That doubled to £24 million. Remember also that they aren't pumping these results by any means, because Brait is investing heavily in buying back its own shares. It bought 168 million rands worth of its own shares in the quarter to the end of June, 2.6 million shares, and it bought them at 62.75 rand. So Brait's share price is at 60.29 rand. The own company is prepared to put more than 150 million rand on the table to buy its shares back at 62.75. If nothing else, I believe that it's bottomed. The upside, already you're getting in at a discount on net asset value. And how strong is that net asset value? In my opinion, very strong indeed. They have valued New Look at a 28% discount to its peers. 28% discount. So it values it at what they call a enterprise value to EBITDA ratio of 10.3, and they can use that to look at other companies who are similar to it. It's also valued Virgin Active at a 17% discount, and Iceland at a 20% discount to its peers. In fact, Iceland is only at a 9 times valuation, which those are the major constituents of Brait. They're not pumping up. What I'm trying to say is they're not pumping up the share price. They're not selling you that Brait is worth 74 rand a share when it's actually worth only 60 rand a share. They are trying to be as conservative as possible, which is a rational expectation if you're trying to buy back your own shares, which is what they're doing quite aggressively at the moment. I hope all of that makes sense and then lets you understand why I still think that, notwithstanding the challenge with New Look, that Brait remains a very good part of our portfolio. Getting on to Derek's question on Discovery, their results are coming out soon. Remember, they're a June year-end company. All the indications that we have is that the figures are going to be excellent. All we're looking for is further progress in the UK. You can see that when you walk around the UK, you'll see Vitality, their brand here, has a very, very high profile. Increasingly, people are getting worried about the national health in the UK. It's fantastic if you haven't got any money and you are prepared to spend a whole day waiting to get yourself cured if you're sick. But if you have got money and if you are time poor, then you really need to have an alternative to the national health, which is creaking and unlikely to get any better given the demographics of the UK. So they've come into this market with Vitality at probably the right time. Remember, there's lots of other initiatives that Discovery is driving internationally in its shared value model, and we won't really go into huge detail there. But it is innovative. It is something completely different. It has been quoted by Harvard Business School. Michael Porter, who's rated as the top business thinker at the moment, is a huge promoter of the shared value model, which he got from Discovery. So it's like that story of a missionary in your own background. You don't get properly recognized. I'm a very, very big fan of Discovery's. And if you were to take the cream of South African brains every year, you'd find a good percentage of them end up working for Adrian Gore and his team at Discovery. So I see what they're doing in the UK. I see what they clearly have done in South Africa. There are challenges in South Africa with the national insurance proposals, but you can't spend money you don't have. And as much as it's an idealistic idea of the Zuma administration, and if they're perpetuated into the future by his ex-wife, that they want to go with national insurance, is not going to be great for Discovery, but it is more and more going to be encouraging people who live in South Africa to invest in private healthcare. If you just consider that the UK can't afford to run its national insurance anymore, not properly anyway, when you take it back to the South African situation where the GDP per capita is 1/5 of what it is in the UK, you can just see how huge that challenge is. Discovery is, I often say, that probably the best business in the world is Tencent. The second best business in the world, a close second, would be Amazon.com, and probably the best business in South Africa for my money is Discovery. I hope that answers your question, Derek.
Well, thanks, Alec. If anyone else has any more questions, please push them through. Derek's the lone range at the moment. But yeah, just on the right-hand toolbar there, please.
So moving on to Investec, isn't that a nice picture of Stephen Kossef? Dr. Stephen Kossef. Who would have thought a boykie from Benoni would be given that? Well, he's clever enough to be a doctor many times over, but Kossef becoming given an honorary doctorate, you can be sure he's not one of those egotists who's going to use it. But it's a nice thing for him to have. He did go to Wits anyway, so it's nice to have his alma mater giving him that acknowledgement. It's a great company, this one too. You see it in the UK. You see the way that they've focused their marketing expenditure in areas where it really hits their market. You see it in the, I'm a client of Investec, so I can talk from personal experience, but you see it when you phone the call centers. You're talking to graduates. They only employ graduates in the call centers, in South Africa, by the way. So if you've got a UK account, as I have, and you phone the call center, you get through to WBHO or to somebody who's extremely well informed and can give you a great idea of what the weather's like in South Africa, and also great information. They really are on top of their game, and they continue to do extremely well. Investec, I think, operationally, we've seen the numbers. They were excellent, their last set of financial results. But Investec labors under this problem that banking shares around the world have got. The market doesn't like banking shares right now. We're seeing in the UK publications lots of experts coming out to say that it is the cheapest sector of the market, and it's time to be buying banking shares. They don't look at Investec in that light. They will talk more about things like Barclays, HSBC, Lloyds. In fact, we even looked at Lloyds and thought it might be a good one to add to our global portfolio a while ago. But Investec is a stock that I'm very, very happy to have a significant holding in. It hasn't done much, but it's up a few percentage points, 4%, since we bought into it in the first place, and a very solid business to have in the portfolio. And here's one of my absolute favorites, Marcus Jooste, who is the chief executive of Steinhoff. People who know him rate him as one of the smartest that they've ever met. He has a binary mind, and a very brilliant one as well. He doesn't buy on emotions. In fact, a lot of his way of going about acquiring businesses is first of all get to know the people, and after you get to know the people, then do the deal. You might notice that a few years ago he brought Sean Summers on board as part of the Steinhoff team. Sean was then given a very small portfolio. Sean, the guy who used to run Pick and Pay for many years, given a very small portfolio in the UK to run the betting businesses. But that wasn't to last very long. Sean is now based in Houston, Texas, where he's running the biggest foreign acquisition ever by a South African company, a business called Mattress Firm, which is the biggest mattress company in the United States. It is a huge part already of Steinhoff's operations, and likely to get bigger in future. If you were to find a fellow South African who you'd like to put into this business to run it for you, I don't think you would look very much further than Sean Summers, a brilliant retailer, as he's shown, and also an excellent marketer as well. Sean is very much part of the Steinhoff team, and I've had the opportunity of seeing a bit of him here in the UK. He hasn't yet been able to tell me about updates from Mattress Firm, but that is a huge bet for Steinhoff. What it means is the acquisition of Mattress Firm now gives Steinhoff a very big slice of the US market. It also is one of the few companies that is immune to an Amazon.com bulldozer. Amazon is going, when just the mere suggestion that Amazon is going into a market is enough to send panic into share prices in that sector. Well, there was a very good report. I wrote about it on the premium section, which you can go and read that stories on Steinhoff. It was about a week ago, and I did some research into something that Morgan Stanley had put together, because clearly they're worried now as investment advisors when clients of theirs have got shares in companies that can get affected by Amazon. So they've done this whole research report to say, what won't Amazon hurt? And you could almost write Steinhoff's name there, because it won't be hitting low margin businesses. It won't be hitting bulk businesses, very hard to deliver a bed. And it won't be hitting what they call the cut price area. And that's where Steinhoff operates, in both PEP stores and in Poundland, for instance. Which Poundland's an incredible business. When you go to the UK next time, and it is Steinhoff paid a pretty penny for it, but it's a fabulous business model. In that, what they do is they negotiate great deals with suppliers, and you can buy a tin of shaving cream through to a huge big chocolate to whatever it is for £1, literally £1. And £1 is, in South African terms, 17 Rand. It's not, it's quite a lot of money, but a pound doesn't get you out of a lot in the UK. Yet at Poundland, it does, buys you a fair amount. And that's another area, and you also look at PEP stores and the way that that's positioned, another area that is Amazon proof. So if you're going into retailing, all the retailers have been smashed. They've all been hammered because of the concern that Amazon is going to take them out across the board. Now finally the investment analysts are saying, hang on, not all retailers are equal. Some of them are going to be hammered by Amazon, sure, but quite a few of them aren't. So who isn't? Steinhoff isn't. Add the South African connection, add Mattress Firm, where Sean Summers is running it, and incidentally, he won't be much of a culture shock to those people in the business, because Mattress Firm, which is a $20 billion business, was started by, 20 billion Rand business, was started by a South African, a guy who sold mattresses in Durban and then went off to the United States and built it there. Very exciting stuff all around for Steinhoff, and again, a little bit like Discovery, not being fully appreciated by people in its home market.
Thanks, Alec. I've just copied the link to that Steinhoff story in the chat for anyone who's interested on the attendees. It's there on the chat, just under the questions as well, so that's good.
Thanks, Stu. And that really is a worthwhile piece. If you didn't read it when it came, when it was put into your inbox, it was well worth doing. Now here's it's a bit of a stretch to have Glencore in the portfolio. I would love to be able to put Tesla in here, but you can't buy Tesla on the JSE. If you could buy Tesla on the JSE, because it's a South African who runs it and built it, Elon Musk, that would definitely be in our portfolio, and Tesla's been a fantastic performer for our global portfolio. But on this one, Ivan Glassenberg is a South African. He's from Johannesburg. Glencore recruits in South Africa. It's got assets in South Africa. So it's listed on the JSE. So it does qualify for this portfolio. And as you may be aware, well, there we can see it. See how Glencore's share price has performed in the last little while. It's been since we bought in June, around here. It began, whoops. Give it another try. Nope. Apologies. Last try. There we go. If at first you don't succeed, try again, Robert the Bruce. There we go. There's the performance of this stock since we bought in. And remember, it was a switch as well from Wilson Bailey, which makes it even better because WBHO has gone down since this time. The reason we went in there was I listened to the annual general meeting, which was webcast, and in that discussion, Glassenberg spent half an hour explaining how Glencore's portfolio had been refocused and fine-tuned to benefit from electric cars. So he'd been thinking about electric cars long time before Volvo decided that they were no longer going to be producing internal combustion engines. It's one of the great themes of investing at the moment. It's one of the great exponential themes, and that is, how do you get it when you have an industry as big as the motor industry, which in many countries makes up 5% of GDP, in some countries even more. When you have a business like that, which is transforming dramatically, what do you do about, first of all, lightening your load towards the internal combustion engine, but secondly, how do you benefit from the boom that is coming? Well, if you look at any gold rush, the ones who make the money are the people who sell the picks and shovels. And that's exactly what Glencore does. It sells the pick and shovels to the electric car industry through cobalt, through nickel, through copper, where it's amongst the world's biggest producers. As an aside, this is another issue that South African policymakers should be applying their mind to hugely, because South Africa's biggest export earner is platinum. Platinum's biggest, by far the biggest offtake, goes into catalytic converters, which take about 40% of all the platinum that is produced in the world. So if you're making all your money out of catalytic converters, which by the way go into internal combustion engines, so you're making your money out of catalytic converters, which go into a product which by 2040 will not exist in markets like the the UK and France. They've already legislated it. No more internal combustion engines in those two countries in 2040, and the rest of the world is moving away from internal combustion. You better start thinking very, very smartly and very quickly about how you're going to be playing this. And I fear that not enough attention has been put onto this. We still have, add to that the fact that the South African industrial policy is promoting motor vehicles. The motor vehicle industrial policy is what? And what are those motor vehicles making? Internal combustion engines. Think for a minute, just for a minute. If you've got a finite date now when those cars will not be allowed on the roads in the UK and France as starting points, and the rest of the world will follow. You can be sure the Chinese will be doing something similar. So that means 2040. Then you go back from that. Well, you're not going to buy a car 5 years before the or say 3 years before the deadline, because what's the point in having a car in 3 years' time? You're going to have to get rid of it. So that takes you down to say 2035. We're in 2017. If you're going to do an investment in a new plant, are you going to make that investment if you can only see a 15 to 17-year return? It becomes a very difficult scenario to work out for yourself. Hence this drive aggressively towards the electric cars. So South Africa's got lots of questions to ask itself on that issue alone, quite apart from everything else. But as an investor, as a shareholder in Glencore, you can be sure that you're in with the pick and shovels of the next big gold rush, which is the transformation of the internal combustion engine towards electric cars. And then MTN, poor old MTN, it seems to get a nice little uplift, and then something hits it from the side. We saw the results or the trading statement from them. It really wasn't awe-inspiring, but I'm not expecting anything from MTN in the short term. This is a company that is bouncing around now at a level where it is massively undervalued relative to the audience that it owns. We are also seeing from all over the world that those who have the relationship with the mobile phone are the ones who are going to benefit from the new media into the future. MTN is being looked at by analysts on current figures, not on potential. It's being looked at by analysts on what the old management has delivered, not the new management. I've gone through in previous webinars who the new management are. They really have, Phuthuma Nhleko has gone out and got the best he can, the very best people that he can from both South Africa and Rob Shuter, the CEO from Vodafone in Europe. They've got the right team. They've got the right assets invested. They've got big potential in Nigeria as that expands. Obviously, South Africa, other parts of Africa, Iran, a very good market as well. They have that connection with the customer, and at these share prices, I'm very happy to put it in the portfolio, almost put it in the back drawer, and not to worry about it into the future. And that, dear friends, is the final slide in our portfolio, just to remind you again on how we've performed. If you'd put your money into the Satrix 40, you'd have got, well, not quite 10.9%, because you've got to take a couple of percentage points off for the fees, etc. But you would have done better than we're doing at the moment. That doesn't bother me. As you heard, this portfolio is a long-term bet. It's you buy the shares, hold them indefinitely, and we've had some very, very good performances by 3 of those stocks in there, Naspers, Discovery, and Glencore. And part of that reason, a big part of the reason for the all-share index performing as well as it has been, it has an even bigger slug in Naspers. 20% of it is invested in Naspers, which, as you can see, is the star performer in our portfolio. So that's our story, guys. Stu, if there's no more questions, I guess we can log off for the day.
Yes, thanks, Alec. Unfortunately, no more questions, so we can sign off as you mentioned. But thanks again for your time.
And just to remind you that we will be transcribing this We'll be putting it up onto the Biznews site once the transcription is there. And you, as a premium subscriber, you do have access to our global portfolio, which is going to be a webinar, which is going to be in a couple of weeks. We're going to be bringing other webinars as well, not just on these two portfolios every month, but other webinars of interest. And I guess that's one of the reasons Bob's here. We're looking to do stuff on leadership. As you're aware, that's a field that Bob knows a lot about and has studied a lot in. So he was just sitting in to see how the portfolio went, how the process goes through. And there will be, we're talking to Dr. Claudius van Wyk, who has a fascinating insight on something called holism, which is a study that Jan Smuts gave to the world. When Einstein saw it, he said that his theory of relativity and Smuts's theory of holism were the two that would be transforming or be the key drivers of society in the century that we're now in. So there's lots coming up on these webinars, and thank you again for joining us today. We'll be back with an update on the Champions portfolio in a month's time. Until then, from me, cheerio.